This week, we're talking retail prices, supply and demand numbers, and consumer sentiment. Hello, I'm Meghan Grebner, your host of the weekly Livestock Market update on Brownfield. With us, as always, is livestock economist Scott Brown. Good afternoon, Scott.
Good afternoon, Meghan.
We'll get to all of those reports coming up, but first, let's recap what happened this week in the markets.
If we start on the cattle side this week, live fed steers were down about 50 cents this week. Those feeder cattle markets were $1 to $3 lower on the week. For the first time in a few weeks, we have futures higher for cattle. The October live cattle futures contract was up $2.30 this week, and the October feeder contract was up $8 on the week. We lost $3.50 on the choice box beef price this week. And on the hog side, cash barrels and gilts were down $2.45 this week. The October lean hog futures contract was down $1.30, and we lost nearly $2 on the pork cutout value. Ribs and hams led the way lower for that lower pork cutout value.
Obviously, nice to see a little bit of a bounce on the cattle futures side of things, but it's been kind of just a weird week of business, especially if you take a look at what's been happening at sale barns and some of those deals around the country.
I still think we have a lot of uncertainty here for a little bit. You look at the data we got, and the one for me that sticks out is lower choice box beef for the week. We're saying about $3.07. That's probably not supportive of a lot higher fed cattle prices anytime soon. So if we continue to see those marching lower, that might not be some of the best signs we see on the cattle price side of the equation.
All right, let's take a look at those slaughter numbers. As we dig into those, reminder, we had a shortened holiday week a week ago, so that might skew some of what these numbers look like week over week.
Yeah, we certainly have recouped this week for the week ending September 14th. USDA tells us a run of 620,000 head of cattle this week. That is up 78,000 from the shortened week prior, but down 11,000 head from where we were a year ago. On the hog side, we also caught up here a little bit. 2.571 million head is what USDA is suggesting for this week. That is up 244,000 head from what we did last week, and up 36,000 head from what we did last year.
And as we take a look at those numbers year over year?
Yes, we really haven't changed. So cattle slaughter down 4.1%, and hog slaughter up 1.3%. I look at that cattle slaughter down 4.1%, and although we're going to talk WASDE here in a little bit, USDA now says 2024 beef production down 0.6% relative to 23. It's amazing we're down slaughter over 4% and only down in production 0.6%.
And we get to talk about that a little bit more, and we'll talk about that more, even more next week, I'm assuming, as we have livestock slaughter numbers that come out as well. Let's start first. Retail prices out this week. I think it's always interesting as we take a look at those, especially as we're having so many conversations, one about inflation, two about grocery prices, and how all of these are stacking up.
Yeah, for sure. And I think it's wise to have this discussion. Number one, I'll say grocery prices flat. Generally, meat is not what's been driving the flat of late. So we're not talking about lower grocery prices, but maybe losing some of that stronger inflation that we'd seen in grocery prices over the past couple of years. The choice retail beef price for August of 2024 came in at $8.52 a pound. That was up 8 cents from where we were in July. So up roughly 1 percentage point from July to August. And when you look at it year over year, up 3.5% from August of 2023. So higher beef prices. When you look across the board, all of the different components higher. So ground beef led the way, up 9.9%. Sirloin steak only up 0.9%. So we see that ground beef bump in that data. And I'll just say, relative to August of 2019, we're up 40% on beef prices. So the truck up, and now I think some flattening maybe beginning to occur. On the pork side, pork retail price for August of 2024 at $4.90 a pound. Well, that was actually down 2 cents from where we were in July of 2024. But when you look at year over year, that pork retail price is up 1.3%. And just like for beef, comparing to August of 2019, we're up 26% on the pork retail price over that period.
I want to talk a little bit about that trajectory up on the beef side of things. Obviously, COVID is in there, supply and demand issues are in there, and now we're talking about, while not down substantially, but tighter beef supplies in general in terms of overall production. Is this surprising that, and I don't want to say we're only up 3.5%, but knowing that the herd is as small as it is, that it's just 3.5% higher than it was a year ago? And I mean, I say that guarded, but I mean, honestly, when you think about just how small the herd is overall.
Yeah, so I think the important thing here is back to the original point of, hey, slaughter's down 4%, 4.1 year to date, yet we're going to be down less than 1% on beef production at the end of the day. That's not where anybody was at when the first projections for 2024 were out by anyone. It's not a knock at USDA. I think we were all there expecting even higher prices because we were going to be even shorter than where we're going to end up being in terms of beef production at the end of the day. So I think that's had some play in this 3.5% increase from year ago levels in the retail beef price. Now, just play that out 2025 for a minute. I think slaughter will still be down. Do we grow slaughter weights even more? I'm not sure what to say to that yet, but USDA is going to call for a much larger decline in beef production in 2025. So this pressure is not going away, I guess, is my point. And in fact, we kind of pushed it down the road by the heavy weights that we've seen in 2024. And, again, we can thank things like $4 corn for helping us do all this, but we're not done. I don't think in getting even tighter, so we can always talk about this as the smallest beef cow herd we've had since the early 1960s. So we talk about it in decades, but I think it could still get tighter. And so I think that's the important thing of, well, here's where we sit today. And you and I have talked about this for almost all of 2024 about beef demand has stayed strong at these high prices. Do we need prices to go even higher as we set the stage for 2025 in very tight markets? And I say that in the face of what's been weeks here of lower cattle prices and a box beef price that's struggled and did not pass its record that we saw in 2023.
Is there a scenario where we kind of talked about this in terms of inflation, right? Like so in that same correlation, is there a scenario where we increase cattle weights enough that we don't see, yes, we see a pullback, right? Like we see production decline, but it's not enough to significantly shoot until we get to the point where we start to grow again.
Yeah. So I think this all comes down to what can we do on the weight side. And maybe we'll feed even heavier next year, but I don't know that we can repeat the 25, 35 pounds that we've done this year again next year. So can we grow them? I think the answer is yes, but not at that rate, I don't think. And so I think that's the important piece of the discussion here about, so what if we're down 2% or 3% on beef production? How much pressure does that put on things? And does that have enough negative demand implications for us to begin to say, hey, we've lost some of that demand growth or positive demand that we've seen? there's, to me, still not a lot of signs we're seeing a big slowdown in beef demand to this point, but I always worry that slowdown were to happen, it might happen pretty quickly.
I feel like this sets up that conversation. Hey, make sure you're managing risk and mitigating risk before it's too late.
Yeah. So I often talk about, and I tend to focus on our cow-calf producers here in the state of Missouri when I have this conversation. So you go back to what we were doing in 2014 and 2015, and folks like myself would have been out there saying, I think cattle prices are going to stay high for a period of time. And they didn't. And in fact, we lost a lot of that strength that we would have started 2014 with, and went back to old levels by mid 2015. That's the risk I'm worried about. It's the risk of a major price correction, that there are way too many tools in the toolbox to avoid that kind of decline, I think. So let's not let ourselves be lulled into, well, this cycle is not going to be like the cycle we came through in 2014 and 2015. I'm not, I believe that we're probably in a different pattern this time cyclically, but we have too many tools to avoid a repeat of what we saw in 2014 and 2015. Let's make sure. Uh, yes, I know cattle prices have come down substantially since early July, but substantially is a far cry from what we did from early 2014 until mid 2015.
All right, supply and demand numbers out from USDA this week. As you look at that August report, talk to me a little bit about beef production for 2024.
Yeah, so USDA increased 2024 another 60 million pounds. We've been on that discussion for a while. As we've gone month to month, they've been continuing to increase. That now 26.9 billion pounds is what USDA is calling for 2024 beef production, would make it only 0.6% below where we were in 2023. That was fairly big. They did increase chicken production 230 million pounds August to September as well. So that we raised supplies. If you look at the per capita availability across the three, beef, pork, and chicken, it's up 0.7 of a pound from August to September. So they've been raising that side of the equation. When you look at 2025, beef production, they raised 180 million pounds from August to September. That would still leave 2025 down 4.4%. But I raised that because, are we starting to see the same thing from USDA in terms of chasing beef production higher? And although they're calling for a 4.4% decline in 2025, when we're sitting here in September of 2025, where are we really at? Are we still down 4.4? I think that's the important piece here. Now, in response to lower cattle prices, USDA did lower their 24 annual average $3 and their 2025 projection by $5. Well, those were really the biggest changes we saw on the price side of the equation.
On the opposite side of that, thinking about input cost, they also dropped corn prices down as well.
That's right. We got a dime off of the corn price, no change in the soybean meal price. They raised corn yields, I believe it was 0.5 bushel this month. I'm curious to watch. Others, I think, are projecting some lower prices, even lower than USDA for the 2024-25 crop.
I think that will also unfold more as we start to see yield data come in and see what kind of crop is actually out there.
Yes, and so I think the point to cattle, we've talked cattle a lot today, even though they lowered the fed steer price by $5, it would still be a record annual average in 2025. Let me be clear about what what we're doing there.
Just like, man, I feel like I beat a drum here about risk management, but you've got to hear these numbers and think about these balance sheets and not take an opportunity to trying to hold out to hit home runs every single time.
And the volatility, right? I don't think we lose the volatility. That's good and bad. It's so protecting against that volatile situation. I often say I find producers who I turn the bull in the same time every year. I wean the same time every year. I tend to market my feeder cattle the same time every year. And I go, that's a risk management strategy, but it may not be a very good one when we're so volatile on prices. And you pick the wrong week to sell those feeder cattle, it could be problematic. So that risk management opportunities that are there, and I know we've beat this way too much, but we have tools today that we didn't have when we came through 2014, 2015. It's time to learn those tools and how they fit in your operation.
All right. As we wrap up today, consumer sentiment, and kind of ending on a little bit of a good high note for September.
Yeah, that's right. So USDA, the consumer sentiment index was up 1.6%. The preliminary numbers for September. That's also up 1.8% year over year. So that's the highest reading we've seen in consumer sentiment since May of 2024. I think this idea that inflation is slowing has gotten to consumers and helped them be more optimistic about where they see consumer sentiment when the current economic conditions was up 2.6% September relative to August, which isn't that it's a future increase in consumer sentiment. It's happening in that current economic conditions. Again, I'm not sure food really necessarily led the way, or I should say meat in particular led the way as we keep going higher there. But this idea that prices beginning to slow, and I think that's the general trend we're seeing. Rarely do we find retail prices moving lower. We tend to find them beginning to stabilize for a period of time, and maybe that's the start of where we're headed, and thus what's a better consumer story with the consumer sentiment numbers we got this month.
Before I let you get out of here this afternoon, livestock slaughter is out next week. Cattle on feed is also out next week. What two things are you watching for, and what are you expecting to see in those reports?
Yeah, I think it's very similar to what you and I've talked about for a few months now. Certainly beef cow slaughter. We've kind of gotten away from not having a July cattle report to going to start to focus on that January 2025 cattle report. How many beef cows do we really have? So beef cow slaughter is going to be important, I think. Cattle on feed is going to continue for me are these lots going to stay full? How long can they stay full? Do we get short cattle in front of us? We did see placements up hard for July. Will we see that trend continuing in August? I'm not sure we will. I think July was higher just because of what we had done in 2023 as much as what was done in 2024. But watching placements and cattle on feed will be interesting because we've certainly held those, especially cattle on feed. We've been at year ago levels for a few months now that I'm not sure that can continue given everything else we know about cattle numbers.
Scott, we will have plenty to talk about next week.
That sounds good, Megan.
So our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments. And for a rundown of what happens every day in the markets, most days, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.